Lizzy, let's start with you. Investors then and economists expecting a half-point hike. We've talked about just how challenging this is for the BOE, arguably less clear-cut than it is for many other central banks.
Indeed, and you've got Nomura, Bank of America, JP Morgan all warning about the possibility of a four-way split today because, of course, you've got the recession risks, the 18-month monetary policy lag. Swati Dingra, Silvana Tenreiro, the doves of the committee don't want to have an aggressive hike now that takes effect in the eye of a recession. So I'm going to be looking for the vote split today. Crucially, could say a lot about the future path for rates, but the guidance is also going to be interesting as well, because remember at the last meeting they really pushed back hard on the market curve, the future path for rates. Will they do that again today? Will they drop that language? If they drop it, could look like an endorsement of the curve, so they need to be careful about how they speak about it.
They do, at least at this meeting, have a little clarity in terms of the fiscal priorities of this government, given that they do have the statement from the new Chancellor. How important is that? How much and to what degree is that going to factor in?
Frankly, probably not that much. So the Deputy Governor, Dave Ramsden, has said it'll probably have little effect on the decision itself. However, it might impact the future inflation outlook. The thing is that most of the measures take effect beyond the BOE's three-year horizon. But what's going to be really interesting is the exchange of letters between the Chancellor and the Governor, because there's probably going to be a big shift in tone from when Kwasi Kwarteng was in office in September, brief as it was, because his emphasis, as you remember, was really on growth. That might be dropped in this letter today.